What's good, everybody? Welcome back to Asia Trading with NQ. This is Training Wheels series, and today we caught a beautiful setup just for practice. So we were here. This is the Asia session. We have the Asian range here from 6 p.m. to 7 p.m. This entire range is the Asian range that we trade. There's buy side and sell side liquidity above and below this range. As we treat overnight session, we treat this range. All these ranges are treated the same way, and they shouldn't be any different from any other. They have certain particular nuances that are different, but for the most part, these ranges all are played the same way. So we have the new daily opening gap, which is here at 4:59 p.m. closing price, and the 6 p.m. opening price is the high. So we have the new daily opening gap here in the middle. If you want to draw it out, you can. I'm just going to go ahead and eyeball that. It is right about there. We have the consequent encroachment of the new daily opening gap, which is right there. We have buy side taken. I reach into new daily opening gap around 8:30, reach into here, then we break down. Once we break down, we have a displacement, change in the state of delivery. If you know where the liquidity is at, you know where fair value is at. If you know where fair value is at, you know where your order blocks are going to form. This right here is your change in the state of delivery. This is your potential order block that takes liquidity. We have here the opening price up to the main threshold of this order block. Then they form another displacement with this propulsion block being left behind here. This is a volatility, or not a volatility, but an order flow indicator telling you that we are looking for bearish prices. Market structure shift occurs here. To be very frank with you guys, let me show you guys this. So market structure shift appears to be here. This is your market structure shift. Let's put a symbol here. That is your market structure shift right there, ladies and gentlemen. And then we form a fair value gap at market structure shift. As you guys know, this is a high probability fair value gap. But there's a big but now. Since we are trading in the Asian range, we have to be cognizant that the precision factor may not be as clean as it is in New York. So you have to give price the opportunity to, dance around the levels. Have a puddle, a rain puddle dance, whatever, around the PD array levels. One thing I will say that I'm very proud about is where I place my stop loss. As you guys probably go back in Friday and how we talked about new daily opening gaps and how PD arrays that form in proximity to any discount level or premium level of a new daily opening gap, in this case, we repel away from consequent encroachment, we leave, then we form PD arrays around the new daily opening gap discount level because we're looking for shorts. We're a short bias, right? Any PD array that forms here is great to use as a barometer to see the order flow, but you should always expect price to reach back into the discount level on a bearish play. And if we were looking for a long, we would see PD arrays form here, but then price would still come to the new daily opening gap premium level here. So in this case, your stop loss, although this may be true in New York where you'll see these things just run lower, or in a place where order flow and precision is more clear, then you would have your stops trailing here. But in this sense, you have to be open to let Asia just do its thing. So give these trades breathing room. One of the ways that you can give a trade breathing room is the opportunity to use the scaling in method. If you scale in your trade, you can give all of your trade setups or entries some space to breathe. Reason being is because if you have a one mini contract, a lot of us are very fearful of price going against us or screaming against us, because to be quite honest, if you're trading any account that's like around a 50,000 or less or 100,000 or less, one contract is a lot. So one of the ways that we can get rid of that fear is by entering in many areas and just hedge the position. Instead of you wanting to be precise and then just place a stop loss based off the risk, why don't you just scale in? Even if you would have placed your stop loss all the way above here, this would have been less than a $50 loss because it's 1 micro. So scaling in is a good opportunity to give your trade some breathing room. So what I did was, since I knew that they were probably going to return back to the discount area of the new daily opening gap, I put my stop loss above the consequent encroachment around here, and you just keep scaling in as price keeps showing you the bearish order flow that's in the marketplace. So I shorted here, I shorted as well here because it kept leaving. This to me all became one down close candle. So when we closed below here, I shorted into it, like the process of us going into here and shorting again, but then it came back above, respecting this fair value gap here, and then came back to new daily opening gap. Had I trailed my stop very fast, like let's say maybe to this order block's opening price or closing price, whatever, I would have lost instead of being patient and just keeping it up here. What I'm starting to realize is break even stop losses only should be moved to break even when we close below a range. So in this sense, we've been going down, up, down, and we've been staying inside of this range here. Once we leave here, this gives us the opportunity to bring our stop losses to break even or trail it, depending on where your entries are. This right here is your low risk sell. This right here is your first level of distribution, taking out the buy side liquidity, then reversing back inside the range, shows us its willingness to go lower. Then here we have our second leg of distribution, and off of the second leg of distribution, as you guys probably know, there is speed. So I entered when we close below this, and now we use this fair value gap as a bearish fair value gap again, and it traded into here, spends no time, so I sold it here. But then I knew that there was a possibility of them returning, and again they did. Second level of distribution. This right here could be considered your breaker. We have a balanced price range inside the breaker, or an imbalance inside the breaker. That's high probability. So look at this real quick. Second level distribution brings speed. Second level distribution brings speed. Right here. We have equal lows here. We have this minor sell side liquidity right here. If you had seen this, you could have been in this short and expect speed. Your stops could have been placed above here or above consequent encroachment of the new daily opening gap, and you would have been part of this move. But these are 4 entries that I scaled in, and then I paid myself out after it took this out and we wicked back inside the range. I knew that this was going to cause an issue, because if it really was bearish, it would have found a lot more resistance off this BPR here, or this inversion fair value gap as many would call it. But I call this a BPR because it's up and then one down candle there. This is a balanced price range. So here I would have shorted this, right? But when this came here and it wicked back inside the range, this gave a lot of reason for me to just take my trade and go, because reversals are a real thing and you have to respect them. We have then this fair value gap here, which I marked as an inversion fair value gap because I wanted to see the possibility of us staying above this sell side liquidity here and the sell side liquidity that is down here resting below here. So the fact that they're staying in there just tells me, hey, probability has decreased because price is now going back and forth, we're not leaving any imbalances open or any fair value gaps are being presented. So this is now a low probability condition. We should not be trying to trade during this condition any longer. Here we had the opportunity and we caught it. So it was a great trade. If I had to highlight the things that I did well during this session, it was the way that I scaled in and my stop loss placement. And I think that if you are truly trying to be a trader that doesn't have any anxiety when you're trading, it's okay to give your trade some breathing room, and the only way you'll be able to do that is if you lower your position. You'll trade minis, which is great, but when the precision is not there, come down to micros and trade and enter patiently, build into the position. So that's always a good thing. And this was a phenomenal trade setup for me. I think this was one of my best trades of the month so far of October. So yeah, I love the stop loss placement concept of leaving room for any short-term imbalances that might have some weight, like the new daily opening gap. Leave those discount and premium levels, give them room to play around with those levels, because that's what they do. And then when this happens, you're able to place your stop loss at break even. So I'm very proud of how I carried myself. I wasn't fearful. There was no emotional attachment to this trade, and I allowed this to do its thing. So yeah, thank you guys for tuning in. I hope you guys have a blessed night, and yeah, I'll see you guys later. Peace.